I don't necessarily view retail real estate specifically as being in a cycle, as being in a long-term restructuring. But over more than 20 years ago, specifically in the smaller markets, tenants started to rationalize their store counts, where retail chains once had a number of stores in specific markets. They reduced them over time to one or perhaps two stores, more profitable, more productive stores. E-commerce, the emergence of e-commerce has actually accelerated that trend, specifically in the major markets, where stores are specifically looking now at what their the store rationalization should be in each market. Where you have bricks and mortar retailers expanding their e-commerce business, you have e-commerce tenants now opening bricks and mortars, but the same question persists: how many stores should I have in a specific market? So when we look at a market like Winnipeg, we have a number of tenants looking at the retail developments in the market, plotting out their geographic diversification, where they should be in the market, but ultimately the same question persists: how many stores do we need in this specific marketplace? And Winnipeg has long been a market where you've seen strong, steady growth. However, I don't see retailers looking to grow their footprint in this market necessarily as I do repositioning where their stores are located in the Winnipeg marketplace.
I guess I would use the old baseball analogy. I think Winnipeg is in probably the sixth inning of the cycle. Having said that, I'm not really sure how long the baseball game is, or whether it's a 9-inning game or a 15-inning game. I think, and also the game that Winnipeg's in is more of a game of singles and doubles, and not necessarily of home runs. But overall, I think we're probably in the sixth inning of a game that might go extra innings.
I would say that in the office market, Winnipeg is about to experience a pretty significant supply glut. There's been positive absorption in the B and C markets, but negative absorption in the A-class market, and new supply coming to the market pretty soon. So that has created a bit of a trough, if you will, in the office market, and in particularly in downtown. On the retail front, there's lots of exciting things happening, and there's new entrants still coming to the market. We're seeing adaptive reuse of a lot of old real estate stock in the market. Landlords and developers are reinvesting in a major way, both on the retail front and on the office front, and there is demand for these reinvented products. I think overall, Winnipeg remains stable, and it's going to be a good story in 2018.
Well, I think the Winnipeg commercial real estate market is at the bottom of the fifth inning. We've had several good years of moderate growth in Winnipeg and Manitoba, and I expect it to continue for the next 2 years.